Hello everyone, Greg Diamond here with another edition of Diamond's Edge. And this week I'm going to look at banks, financials, and then how this is going to look in the second half of 2024, what we need to watch, what we need to be on guard for, if you will. There's some divergence happening that I'm going to point out. All right, so let's jump right into it. And this is a chart of XLF and the NASDAQ 100. XLF is here in black. NASDAQ is here in 100. NASDAQ 100 is here in blue, okay? And what I want to show you here is, this is back in 2006, 2007, 2008, all right? Right before and during the great financial crisis. You know what happened. I know what happened. We don't need to go over it, okay? Well, what I am going to go over are some of the warning signs that we saw back then with the spread between banks, financials, and tech. All right, and we'll see this again. This is something that I think is very, very important. And as I told 10 stock traders subscribers this morning, one of the first things I learned trading, a very important lesson, is to always watch bank sectors, because the banking sector tends to send a warning sign of early trouble within the stock market, within the economy, whatever it might be. And this time frame, again, right before the great financial crisis, is a great example of that. So you can see here, XLF top first, call it June of 2007, late May, June. All right, and then you can see how, look, first of all, let's look at the correlations between the two. They were hand in hand, almost a 100% correlation. All right, and then around this time when XLF topped is when we really saw a massive divergence. Right, the banks took a nosedive. NASDAQ kept going. Then it dropped. But look, then there we had this final high into late 2007, and this marked a lower high in banks and financials. Right, and then we know what happened. So the point here is, when we see this massive divergence between tech and the bank stocks, we have to take warning. You have to say, all right, something's not right here, when the underlying fundamentals, really underlying technicals, at least the way I look at the market, and that sends a warning sign. Now, obviously that warning sign worked back then, okay? Now let's look at what's happening right now, okay? So you can see here, again, XLF in black, NASDAQ 100 in blue, and this is back to last summer and fall. I mean, again, a near 100% correlation between the two. And then as it would happen here in May and June, very similar to what happened back in May and June of 2007, banks are starting to diverge from what we're seeing in tech. All right, so does this mean we're looking at an imminent crash? Not necessarily. Not all stocks, not all tops are the same. And that the spread between what happened back in 2007 took months for that to develop before the ultimate, waterfall decline, if you will. So I'm not looking at this in terms of, you have to go out and sell everything right now. That's not my point here. My point is that, look, this is starting to diverge. Let's see how it plays out. We also have to factor in time. And I gave some very bold claims and specific time factors to watch for paying 10 stop subscribers in the weekly market outlook this morning. So that this is going to guide our trading over the summer and certainly into the fall. As we get closer to election and volatility that's likely to take place around October, November. All right. So I'll have specific trades for that, but this is kind of a preview. It's like, all right, we're seeing this divergence. Let's be careful, or let's be not as bullish. I'm still relatively bullish most sectors, okay. But when I see this divergence, it's like, okay, we need to be careful. And what we can look at, all right, this is just XLF on its own. We can look at certain patterns within XLF. Oh, here we go. So we can look at this pattern and say, all right, is this just chop around before it eventually drops, as maybe NASDAQ and semiconductors rally? Or do we have, does XLF actually take the lead and catch up with NASDAQ? That's fine. Again, I'm still relatively bullish. But if it doesn't start to diverge as we get closer to the election, that likely tells me that people are starting to pull back. There's not as much bullishness, or maybe we see the extreme bullishness in tech and semiconductors, but it's not confirmed with XLF. That would ultimately be a problem. So this is something I'm going to keep my eye on. I highly suggest you keep your eye on it as well. This is going to be on the radar for the second half of 2024, and may give us a warning sign of volatility to come for the rest of the year. All right. Thank you very much. I'll see you next week.